Welcome back to the channel. Or if you're new here, my name is Kai, and in this channel I talk about all things money, personal finance, and investing. And as part of my channel, I have a series where I update you every single month with my portfolio development, all my wins, and of course also some losses, and document my journey on hitting my first $1 million in stocks and ETFs combined. That's obviously excluding my real estate portfolio. And for me, it's not about boasting, but more inspiring other investors. Because when I started my investing journey, I really enjoyed watching others, share their portfolio updates. And for me, it was always inspiring. And now when I go back a couple of years, it's really nice to see where I started, right? Back when I was around, I think 40 or 50,000, I started first to now, fast forward a few years. You see here my current total portfolio balance without real estate, which obviously is the biggest part of my holdings. But still, I'm really happy to see this growth over time. And again, the total gains over $115,000, really not too shabby. Now, for some of you watching, this might look like peanuts, and that's totally fine. Well, for others, again, you might be just on the beginning of your investing journey. It looks like a big portfolio, right? So it doesn't matter wherever you stand. Don't compare yourself to other people. I always say that. Compare yourself to yourself from the previous months. And that's exactly what I also want to do in this video and show you how my portfolio developed month on month, because that's very important, right? You want to see the progress over time, even though there will be months, as we're going to discuss in this month's update, where you're going to have a decline in portfolio value. And that's totally fine and totally normal and part of investing, right? It doesn't only go up. That's natural. So yeah, again, I'll go through all my various holdings, and in the end of the video, also give you an update on the passive income I received for the month. So let's kick things off. Over here, you can see my portfolio starting from highest to lowest. And obviously, the biggest part is still very much my Bitcoin holding. I'm always happy with this, but at the same time, I'm now also very consciously investing more and more in my ETFs and stocks to kind of catch up with this. Now, and actually, it also grew the most in total size, but at the same time, it's very volatile. But you can see for the last month, actually, all my holdings, and we'll come to this later when we speak about my stocks, the earnings reports, those two companies I own came up with were absolutely amazing. So you can see the gains are incredible. However, the gains for the month really not that big, considering that I contributed significantly more amount of money that month. So in that way, it should have been significantly higher. But you can see the biggest issue came from the drop in price for Bitcoin, where I'm down almost 6.5K in dollar terms, right? So all of these are in dollar terms. So that's, of course, the biggest impact. If it wasn't for Bitcoin in this case, and I can actually take it out, if I just look at stocks and funds, you can see a major growth in my portfolio month over month, which is nice to see, right? So that's obviously something to consider. If you have more volatile assets in your portfolio will naturally swing more over time. And again, it's just part of being an investor, right? And also, as the numbers get bigger, the swings get more pronounced, right? While in percentage terms, they may not be that big, but in monetary terms, it will be a huge impact. Let's imagine a 5,000 euro portfolio. A 10% swing could be 500 euros up or down, which again, might seem a lot, but in the grand scheme of things, 500 euros is more manageable. And now imagine a 1 million euro portfolio. Here, a 10% swing, all of a sudden, you talk about 100,000 euros up or down. These are major numbers, right? So even as the percentage stays same, the monetary swings will get much more pronounced and impactful to your portfolio. So even if you start contributing more and more, those swings could completely wipe out your additions, at least on paper, right? Obviously, you invest for the long term, so it doesn't really matter in the short term. But yeah, that's just something to keep in mind. And at the same time, for me, also brings more fun, because previously when I started, most of my gains came from my portfolio additions, right? The deposits that I made to the portfolio. Now, the biggest impact to my portfolio comes from the actual price development of the underlying assets. So yeah, as I said, in my crypto holdings, unfortunately, it went down a little bit. But again, I'm a long-term believer in Bitcoin. You see here, I have also Kronos and Nexo, but these are tiny holdings. In general, mostly my portfolio of crypto consists of Bitcoin. And, let's not forget, we also had a really good year so far. I mean, up 17% for the year. And I still think we're going to see way higher numbers in the future. I'm not rushing anywhere. I'm not selling. I'm not buying. I'm just holding, waiting on the sidelines to see what's happening, but I'm really not too worried about it. And if I jump over to Snowball Analytics, is another one of my portfolio trackers. I'm currently using Snowball Analytics and Delta. Both of them have their pros and cons. Unfortunately, there's not one that does all of it, but I can definitely recommend both of them. They're really great tools. And the cool thing, for example, I can see very easily where my Bitcoin is being held. Right now, I split it between Ledger, where I have the majority of my funds, on the hardware wallet, which I always recommend. And some of it I actually recently moved over to Nexo, where I do earn some interest on my crypto, which is nice. I'll come to this later on when I talk about passive income. So that's obviously a nice way. So I kind of split it, even though for most people, I do recommend keeping majority of your funds on a hardware wallet. You have self-custody and full control over it. Right, with this, we move to my two ETFs that I currently hold. which is the S&P 500 ETF. You can see over here SPY5, as well as NASDAQ 100 ETF. So these are my two ETFs of choice. And again, like so many other stocks in the industry, in the US especially, with tech doing extremely well in recent times, they have done really, really well. I mean, look at this, 5% up for an ETF for the NASDAQ 100 in a month. It's absolutely incredible, right? I mean, these are just outstanding performances. Since the beginning of the year, people believe we are in a bubble and it's about to bust and we're entering recession, and it keeps on going from all-time high to all-time high. And I think that's also the point, right? We talk about investing for 30, 40 years, let's say with an annual return of 10%. Naturally, you're going to have new all-time highs all the time. So that's just something that will keep on happening. Now, there will always be price drops along the way, right? We saw that over here at the beginning of the year. There was a big correction and people thought that's the beginning of the recession finally. Well, guess what? If you stop buying, you would have missed out on that nice rally since then. So these swings will just keep happening. So for now, while I would like to buy more of my ETFs, I'm also very excited about buying more stocks. So moving on to the stocks, I only added 2 actually this year. You can see they've done already extremely well for me. I'm really happy with that. I wish I could have bought more before the recent price rally for both Google and Amazon, 2 companies I really have full conviction in. And recently they came out actually this week with their earnings for Q3, and both of them done extremely well. And I'm really happy. Obviously, Google already had a major price hike during the year. But Amazon, actually, for the whole year, we're still only up 11%. The biggest growth came actually from yesterday after the earnings, which was up by almost 10%. So that was really powerful earnings. And Amazon, as you can see, right now, my 3rd biggest position in the portfolio. And I can tell you, I'm not done yet. Now, obviously, I wish I would have bought more stocks before that nice earnings, but I still think we have a long way to go because I think it's such a powerful company. I'll probably make next week a whole video about both companies, why I believe in them, why I'll continue investing in them. But of course, also one thing we all go through is the concept of price anchoring. I started buying Amazon back when it was around, I think, $180, even down here at the lowest low. I started buying into it. And now we're talking about a price of $244. So major appreciation. So I see a lot of investors then make the mistake and say, well, now it's already too expensive. It went up so much in price. I'll wait until it comes down. And as I've shown you before, many times it just won't come down, right? There will be little dips here and there, but it's not going to go down, at least in my opinion, to $150, right? Hopefully not. I mean, maybe it will, but it's very unlikely to happen. So in this case, you'll be missing out on a big rally. Why would it stop now, right? We've just last week seen Nvidia for the first time hit a 5 trillion market capitalization, $5 trillion. Now, they came down a little bit since then, but yeah, we never seen a company hit 5 trillion. I remember a while ago when Apple, I believe, was the first time hitting, 1 trillion, 2 trillion. People say, oh my God, how much higher can it go? And now, a few years later, we already at 5 trillion. So what's going to stop a company to hit one day 10 trillion? Why not? I really believe in it. And then in comparison, we look at a company like Alphabet and even Amazon now at 2.6. Imagine, many years from now, it could definitely go to 10 trillion. Why not? So that's an easy 4x from here. Definitely. I could see that happening. Again, there's no price prediction. There's no buying recommendation. It's just my logical thoughts behind it, given with all the investments, the diversifications across different business avenues, the automation, AI. But again, these are maybe thoughts for another video. And we jump over to Snowball Analytics again. I can also really nicely compare my portfolio performance to different benchmarks, for example, S&P 500, but I could also select some other ones. But let's go with the S&P over here. And yeah, you can see obviously how it performed. And over the 1 month, unfortunately, I actually underperformed the S&P once again because of the impact we see over here of Bitcoin, which really underperformed the market. Now, if I was to go into only my stocks and ETF portfolio and I do the same comparison, well, you see, now I actually outperformed the S&P, which is obviously really nice to see. That's why we diversify, right? Because certain months, some asset class perform better than the others, and that's totally normal. Ultimately, overall, you obviously want to have good, strong performance across your portfolio. So if I now go back into the total portfolio and go to all time, then obviously my Bitcoin performance really helped me tremendously, and I massively outperformed the S&P by almost 50%. This, of course, for me makes me really happy to see that strong performance. So that's what I'm saying. Some months, some assets perform better than others, and that's totally normal and fine. Now, in terms of my portfolio breakdowns, the various portfolios that I do have, my 2 biggest holdings are right now still on Interactive Brokers and eToro. But now in recent times, I started using more and more my trading 2-on-2 account again, because I want to also build up the balance to be in line with the other 2 so that those 3 are all in line. I also start dabbling around with XTB, which I also quite like as another broker. You obviously don't need to have that many brokers. For me, I test brokers for a living, you could almost say. So naturally, I need to try different ones. And currently, I really like those 4. But those 3 are really my core portfolios, I would say. Then, of course, as I said, I have my Ledger hardware wallet, which I always recommend to keep majority of your funds on there. A bit on Nexo to earn some interest. as well as crypto.com. I'm about to actually close the account. As soon as my staking period comes up for my Kronos token, I will close the account. I just don't like it anymore. The fees are just outrageous. And of course, lastly, my Bondora P2P holding, which is a cool thing that you can also add and track over here on Snowball Analytics, which I really like. And the cool thing is you can see obviously how it grows over time, my gains from my interest. So that's basically where I'm earning 6% interest on my funds. And you can see also over here on Snowball Analytics how that goes into my dividend income for the year. This year I will make around $918. You can see only last year I made significantly less. So now that combines basically the dividends I get from Google, which is very small, my S&P 500, and of course now the dividends from my P2P lending. That's kind of interest, right? It's not technically dividend, but it still goes under here, which is nice that I can track that. And you see here for last month in total, I earned $82, and that's only from P2P. You can see every single day it's being added, and it's also nice to see that number grow, right? At the beginning of the month it was €1.85, but as I made more cash injection to my Bondora holding, now currently it sits at €2.58. So that's nice. Every single month as I add more to my portfolio on Bondora, it keeps on growing. And my goal is to hit around €100 of passive income from my P2P holdings. I think it will be a nice little cash injection, especially now that all the interest rates around the world seem to be going down. 6% becomes ever more attractive. If you want to check out Bondora for yourself to get that sweet 6% interest on your funds, that's only on euros though, then definitely use my link down in the description below and grab yourself a €5 welcome bonus. And you can also see in December, it will be a very nice dividend coming up with over $307, might be even higher if of course I continue adding to my Bondora, but that will be consisting as well. You can see here Google and of course my S&P 500 dividend being paid on the last day of December. But then looking ahead for the following year, I'll be more than doubling my dividend income or passive income if you want from that side, up to $2,000. Again, not life-changing money, but a nice little cash injection, which of course is always welcome. Now, on top of that, as I said, I also have some of my funds sitting on Nexo, especially my Nexo token and Bitcoin, some of it. And you can see every day I'm now being paid around $5, which is being added on a monthly basis back into my portfolio. And so I get interest on the interest that compounds. So that's around $150 in additional interest in the form of crypto, which really I quite enjoy, and I've been paying it like clockwork. Of course, as I said, there is a risk component to it, right? Leaving your money on exchange. But for me, in my eyes, I feel quite comfortable with Nexo. As I said, I wouldn't put all my funds there, but parts of it I feel really good in return for nice interest. And by the way, guys, if you want to track my portfolio live and in real time, it's updated every time I make trades. You can see all the analytics over here, my dividend income. Just click the link down in the description below, enter your email detail, and I send you a private link to follow my portfolio over here on Snowball Analytics. And I got some more interest from my Wio bank account in the UAE. As you can see, I use Wio Personal and Wio Business. On both of them, I do get interest on my cash sitting over there, 4% on my business cash, and 6%, it's mind-boggling, yes, 6% from a bank. So it was around another over $80. So in total, the interest for the month came to $317. And for cashback, when I'm in Europe, I mostly use my Revolut card. With my Revolut Pro card, I'm in the metal plan. So that means I'm getting 0.8% cashback on pretty much most transactions. But actually, throughout the month, I started using more my UAE card, even here in Europe, because I figured while they do charge me a 1% currency conversion fee every time I pay from euros to dirhams, which is a bit painful, I do end up getting 2% cashback in dirhams. So technically I have a net gain of 1%, which is better than 0.8%. So now I figured finally I might as well just use my UAE bank card anywhere in the world, because technically I'm still better off than using my Revolut card. So in total that came to $108 in the form of cashback, and cashback and interest together came to $425, which is not too shabby when you think about it. And that's without dividends, as they are only currently being paid to me on a quarterly basis. Hope you enjoy this kind of videos and transparency. If you do and want to see more of it, make sure to subscribe so you won't miss any future updates. Next up, check out this video over here. As always, thanks for watching. Stay healthy, get wealthy. See you in the next one. Ciao.